Hey everybody, it's me, Gregory Manarino. It is Friday, May 10th, 2018, and it is already, at the beginning of the day, starting out to be lovely. Let's cover why that is. Well, let's see. How about this? The Confederacy of Dunces right now, they are fixated on the fact that stocks are higher right now. And they are. The Dow Jones Industrial Average is up about 100 points, 103. Okay. But what they will not tell you in their wildest dreams is now the spread between the 10-year and the 30-year is under 14 basis points. That yield curve continues to flatten out as they rig the bond market. They're doing it again right now. They are buying bonds. The dollar is under pressure. Both of these are stock market positive, and that's why stocks are up. Look, this is so similar. I mean, this is like yesterday to me, what we're seeing here in 2008. I mean, you had these cheerleaders, and not just the cheerleaders on the Confederacy of Dunces, but I'm talking about all of the other people out there who kept saying, oh, none of this matters. Ignore the yield curve. Housing is going to keep going up. The stock market is going to keep on rising despite valuations. None of this matters anymore. This time is different. It's never different. And it's not different now. You know, people started... All right, let me put a perspective on this. All right, so right now the spread between the 10 and the 30 year is under 14 basis points. I posted a nice snapshot of that all over my social networks. So if you follow me on Twitter or Facebook or Google+, you can go see it. But when this number here was 4 times what it is now, 4 times what it is now regarding the spread between the 10 and the 30, and I was talking about a yield curve inversion happening at that point, a flattening yield curve back then, people laughed. People ridiculed me. Now, you know what? I get a chance to laugh back. And that's exactly what I'm doing. This is not going to stop people. We are marching into a yield curve inversion. There's no doubt about it. And what we're seeing here in the stock market, this is going to go on for a while. And that's all I've been talking about lately. So I am not a major bear. So forget about that. A lot of people, you know, it's so funny. One group of people says, oh, Greg is a perma bear. Another group of people say Greg is a perma bull. I'm neither. I don't care where the market goes. You all know that. All I am stating are facts. These are facts that are backed up by historical data. It's that simple. So we already understand this. The inversion has happened in the UK and it's going to happen here. There is a lag time. I've covered this. Doesn't mean we're melting down tomorrow. And despite how much I talk about this morning, just for an example, I opened my email box and just boom, all these questions about the yield curve, which is great. But everyone is like, you know, prepared for a crash tomorrow. Look, it may crash tomorrow. But aside from that, if I'm just focusing on here what's occurring here in the bond market and that flattening yield curve and what it means historically, it means we still have time. All right, that doesn't mean you shouldn't be ready for one to happen tomorrow, but that's the truth here. I personally believe, and I've said this so many times, I don't even want to repeat it, but it seems like a lot of you need to keep hearing this from the email, judging from the emails I get. I still believe they're going to prop this up until the midterms. Maybe that's why people are calling me a perma bull. I am not a perma bull. I'm just stating what I believe is going to happen because of geopolitical events, because of the rigging in the market, the rigging in the debt market, the rigging in the currency markets. I mean, everything is rigged. It's insane. It's just a managed market. And anyway, so just keep your eye on this spread. I will keep posting updates on it. We are now under 14 basis points. And the more they get in here and buy those bonds, squashing, literally forcing that yield curve flatter, the more we're going to get to see this. And there are still those people out here that have some glimmer of hope that we're not going to get an inversion, that stocks are going to continue up in perpetuity. To all of those, I am saying this: you are 1,000,000% wrong. These markets run in cycles, period. The next meltdown is coming. It's just part of the cycle here. Understand, it's part of the system. It's the way it's engineered. It's the way it's geared to work for a multitude of reasons that I've covered before. So this thing here is not some kind of a conspiracy. The market is going to crash, and crash hard. Not tomorrow. I don't believe it's going to happen tomorrow. I believe, once again, we are on yield curve inversion watch. Once we invert, and we are going to, then we can really start, setting our clocks here, because there's a lag time. I can't stress this enough. I keep talking about it, and no matter how much I say, every single day, I get more questions about it in my email box. And if I have not written back to you, please forgive me. There is no possible way I can keep up with my emails anymore. It's just out of control. With that said, let's see where this goes. All right? And we'll sum this up at the end of this lovely day.